when I first was thinking about this podcast, what to kind of say about the big tech earnings, there was one real key takeaway that I actually learned this week, and I actually want to let the viewers also kind of shed light on this for the viewers. It's not just about the numbers. Every time there's earnings, there's buzz around the numbers. Okay, Google's beating these numbers, Google's beating the revenue numbers, Google's beating the EPS numbers. What's also very important is the future guidance. A lot of novice investors, when they first start out, it's just, okay, the numbers are good, looking good, we'll just invest in it. They don't care about what the company's proposed to do in the future, the next couple of quarters, how it will work out. And that's exactly what happened. The earnings number for all these big tech companies, Amazon, Apple, Alphabet, Microsoft, they all came out with stellar numbers. Some of the numbers, the best in the history. But what the markets didn't like and what it found too hard to digest is the increase in the capital expenditure on AI and how that will affect the free cash flows in the short term. So because companies are investing so much in AI, they have to divert these resources from, let's say, a potential reinvestment in their core business. AI spending has gone up, but it still cannot match up to the demand that's there in the market for these AI services. So just to give you an idea, Microsoft AI business, just its AI business arm, will reach a revenue run rate of $10 billion this quarter. And it is the quickest to do that. The business arm for AI is the quickest to do that across all verticals in Microsoft in its entire history. AI is the thing going forward. It's not a it's a generation shift, like internet was a generation shift for, let's say, when we were growing up. But now AI is the next big thing. But because they're not being able to keep up with the demand, it's just pushing them back as an investment perspective, from an investment perspective. Apple, Amazon, Meta, and I think Microsoft combined have invested more than $60 billion in AI infrastructure this quarter. That's up 60% from last year on a year-on-year basis. But yeah, I mean, we have to be cognizant of the fact that because capital expenditure means potential reinvestment being lost on the core business, it is going to affect the free cash flows. And that's what the markets didn't like. And that's why you'll see, even though the stock came out with brilliant numbers, some of the stocks suffered. And we'll see that in the technical side when we discuss Alphabet, for example. But yeah, today we'll focus on two main stocks. Next week we'll focus on the remaining four, and we'll cap it off with Nvidia on the 20th. Very important day for many reasons, as we'll discuss as we move forward. But just to kickstart things, Alphabet, one of my favorite stocks, all-time favorite stocks in I think a close competition between Alphabet and Amazon. But yeah, I really love the stock. It came out with its numbers. I'm just reading off of the notes I made. $88.27 billion in this quarter alone versus an estimate of $86.44 billion. These numbers would look like, okay, it's just a margin of a billion or two, but a billion or two is like an entire company on its own. At the scale that they operate in, even a 0.5% increase is a lot of revenue coming in for the company. EPS numbers, again, 2.12 versus 1.83 beat the estimates. There's three things that's actually working for them, and maybe we'll talk about it in terms of graphs when I'll talk about it in a second. But search is still the king for them. It's bringing in around $50 billion every quarter. This quarter was $49 billion. It's been increasing. One of the major revenue arms that's actually been very interesting to look at is its cloud business. As more and more businesses start deploying Google Cloud services, this is bound to grow. It's almost very similar to AWS. AWS, in my opinion, is a far better and efficient cloud business than Google Cloud. But that being said, it's the revenue that the Google Cloud business is bringing in has been on the rise. That's 11.35 billion this quarter versus an estimate of 10.5, beating the estimates again. YouTube ad and subscription revenue, something that we should be really interested about. It's been on the rise. The interesting thing about that, on a TTM basis, the 12 trailing months, it's crossed $50 billion for the first time in its history. Um, Obviously, it's not as huge as, let's say, Google Cloud or the search business, but it's getting there, and it'll only grow from here. On the conference call, Sundar Pichai and even other management executives, they were very heavily focusing on how their expenditures on AI is going to boost these three main platforms. So that's the search business, the cloud business, and YouTube. YouTube, obviously, through AI, generative AI, and the algorithm that kind of sources the best videos for you. Search, in the sense that, okay, that now you have Google Lens. You've got other services where you could just click a picture, ask AI to find the information for you, stuff like that. So their capital expenditure on AI infrastructure is just going to build upon the services that they already have, and which is very important as a company, because they're playing to their strengths. They know what's working for them, and they're building on it. That just keeps going on. So AI is going to boost these numbers further, I believe, in the coming quarters. That being said, I have a word of caution here for all people interested in Alphabet. Alphabet as a company is doing great, but on the antitrust and regulatory sides, it's not been the best quarter for them. It's not been the best year for them. It all started way back, I think, 2 years ago. The U.S. Department of Justice, they came out with a ruling saying that they have an unlawful monopoly in the search business, which is true. But how they're enabling it is what's problematic. How they use their other services like the Android phones, the Chrome extensions, the Chrome website, the Chrome browser, and all the other app stores, for example. It all promotes Google search in a way that the US Department of Justice is saying it's unlawful. And because of that reason, what they're suggesting is quite like, it's one of a kind. The remedy is to divest the Chrome business and the Android business. It's basically separate these two companies, split it, and have it operate as two different entities, which obviously Google's not going to do. And I mean, they wouldn't prefer to do it, because operationally, it's, first of all, it's obviously difficult, but it'll also lead to a lot of revenue loss. Another remedy that the DOJ suggested was to restrict its partnerships with major phone brands like Apple and Samsung. So just to give you background of why this is so important, Google every year pays a huge sum of money for having their search engine as the default search engine on all Apple and Samsung devices. And just to give you the magnitude of this number, $21 billion in 2021. That's the last number that they reported. 2024, I would assume this to have grown by now. That's one quarter worth of revenue from the Google search engine revenue. That's huge. They're paying this amount to these phone companies to just have their search engine as the default search engine. What the DOJ is proposing is to have these partnerships cut off, just to have it more as a level playing field for other competitors. And that's what Google is vehemently kind of opposing. The next couple of months, very troublesome from a regulatory standpoint. November 20th, we'll hear more from the DOJ. That's this November 20th. We'll hear more from the DOJ on what their, future suggested remedies are, apart from these two that we talked about. And then in December 20th, that's when Google has time till to respond. And then next April 2025 is when, kind of the trial will start. And by, I think it is August 2025 is when the ruling would kind of come in. And that's when they'll know if, what the government decides to do. I mean, what the DOJ decides to do. But from a regulatory standpoint, it's been very tough. It's been a, troublesome period. This year's been really bad for them. The same set of kind of inquiries are happening on the EU business as well. So yeah, that's one word of caution. I generally would really track this very closely and to see what Google's doing to kind of have this corrected. The one thing that will work in Google's favor, although, will be that the onus lies on the DOJ in this case to prove that other remedies won't work before an actual split happens. So the split is the worst case scenario, and that will not happen, in my opinion, just because Google will suggest other remedies that would work, and then the onus obviously lies on the DOJ. And DOJ, I don't think, has a vested interest in killing the business, so to speak. But yeah, that's my take on Alphabet. Even though the numbers are good, I'll be cautious just because of the regulatory compliance side. But other than that, one of the best stocks operationally. The revenue it brings in, obviously, it's the market leader. It's been for years. It's like it's the blue chip company in my opinion. But it'll be interesting to see, and I know for a fact it's interesting on the charts, and I'll have Moise explain that.
Perfect. Thanks, James. So we're going to go ahead and analyze the charts for Alphabet. And I think it sort of echoes some of the similar themes with the cautionary notes surrounding what's actually happening, some of the risks to the business itself. But there's a lot of hope. So I'm going to go ahead and share my screen here. So we have the Alphabet stock chart here. We're currently looking at the monthly chart. The ticker symbol is GOOGL. Right now, the closing price was about $171.29. But overall, if we take this sort of overview and look at the stock, it's obvious that it's trending higher. There are a few other reasons why it's trending higher. We can see the candlesticks. There's a majority of green candlesticks, and they're larger than their red counterparts. And every time we see some sort of pullback, we're seeing the buyers step up. There's a few levels that I want to mark here on this monthly chart. It starts with 191.50, which is all-time high, considering the adjustments for dividends and stock splits. There's this pivot high here around 151.82. And then there's this level of support here around $83. If we look at these key levels, we can clearly see that buyers are in control. We broke out of this pivot here around 150 to 152. We went a little bit higher. We hit all-time highs around 191.50 and pulled back, retested this level. This is really interesting to see because we're starting to see a narrative here that Alphabet is looking strong. Buyers are interested. Institution is interested. It's above the 200 moving average here, which is this purple line. It's above the 20 moving average, which is the short-term moving average that I use here to analyze trend, and the 50 moving average. So there was a point here, if you take a look here around $82, where Google was starting to look a little weak. There was some overlap and some concern, but overall, it reclaimed this level, broke this pivot here, and since then, it's been taking a little bit of a breather. The thing with the stock market and most stocks or financial instruments is they can't run forever. Sometimes it does happen. You see those outliers, but they have to take a break. So these are what I qualify as healthy breaks. What I really like about the fact that it's pulling back towards this level of support. So at one point, this was a resistance. So you can color it red. And now, because it's bouncing above this level, it's left a pretty strong indication of buyer support, a bottoming tail that's green. So we can actually change this to green. and call it a level of support. So overall, on the monthly time frame, it's doing really, really well. If we boil down to the weekly, we have the same indications here. It had some trouble, as you can see, going higher into this 150 level. But as soon as it pulled back, held the 20 moving average, and it broke out, we can start to see why the price action for Google has been so bullish on the short term. Again, it's over the 200 moving average, which is what the institution sees. It's had some trouble, got below and between the 50 and the 20 moving average, but it's recently gone back above. But I want to point out this specific candle here, this doji here. When we see a doji like this, what it's telling us, because it's the end of the week, is that buyers stepped up, but sellers slowly started to creep in. So there's a tug of war happening here. So this is the cautionary tale. On the weekly, there is some mixed sentiment between the buyers and sellers, and we were about to start making our way back to all-time highs, potentially breaking it. But sellers came in and showed some weakness. If we boil down to the daily chart here, we can see a little bit of why. I also want to point out here, if you take a look at this candle here, the last candle here had a lot of volume. So a lot of buyers stepped up. And if a lot of buyers stepped up and sellers still were able to bring the price down from a range of 183 down to about 170 plus, it is a little cautionary. But overall, it's still trending up. If we look at the daily chart, then we start to get more granular and see what's happening on a shorter time frame. Everything looks great. If we analyze here, this is a downtrend. We'll mark this yellow. We were on a downtrend, hit the line, got rejected, moved further down. This was that level of support we were talking about, around 150 plus. Now we broke this trend, meaning there is a change of direction happening, a transition happening. We saw some overlap. So buyers were starting to creep up. We started getting equal lows. And then we got a higher low here at 160. I think this really set the scene for how this next green candle came in. This is showing buyer commitment. And we kept following this direction. And here's the most important part here. We have the earnings. So with these earnings, what we typically want to see is when the announcements happen, where is the stock going to open? And we saw it made a pretty large gap up. A pretty large gap up, but unfortunately, right into this resistance level. So when we catch these type of moves and we're looking at where we anticipate price to move, we have key levels we want to identify. And if we look at these two ranges of lines, as a technical trader, intraday, trading within 1 day, when we see a gap up that's slightly extended, it's about 1, 2, 3, on its fourth candle, gapping into a level of resistance, and this resistance level is around 183, we want to see if it holds this level for it to have the potential opportunity to make it higher. But then there's a lot of possibility for price action to start showcasing weakness because it's into this resistance level. This is where sellers originally stepped up before. So we had a huge sell-off. And I think this here just sort of explains the narrative behind what James Invest was mentioning, that future guidance is concerning. There are some risks to consider when you're looking at this stock. But overall, we are still trending above the major moving averages, the 20, the 50, and the 200. But what we want to look for here, because we had a huge sell-off, more than 50% between this pivot and this pivot, this is where we have the price action currently sitting. What I'd like to see in order for me to be more convinced that there's bullish price action that's going to come is I want to see it hold this level between 168, maybe if I'm a little bit more flexible down to 161. If we can hold this level and see Alphabet start to make a range in this area, like the way that I'm drawing right now, there's a chance it can start to break highs above 175 and slowly make its way up. And we're going to use these previous resistance and support levels, specifically right here around 184 and 174. We're going to see if these key levels hold. And as an intraday trader or a swing trader or an investor, you can go down to the smaller time frames. So in sum, the big picture that I do see here, which is promising, is that buyers are stepping up. There is a lot of investor interest on the long side. It's holding this trend line, but on a shorter time frame, for example, the weekly and the daily, I need to see more commitment from the buyers. I want to see it hold around 160 to 162. And based on whether I'm swing trading or investing for the long term, I can identify key areas where I want to enter, where I want to set a stop loss potentially, and where I can see a potential target. And 190, 150 is not far away. But if you are more of a conservative trader or an investor, you want to wait for your areas of confirmation. You want to see it hold the 200 moving average. This is going to be super important. So give yourself the opportunity to enter at the right time, get the right price, and you can slowly build into your position. One of the most important aspects of day trading, swing trading, and investing is you don't have to go fully in. You can start to build into your position. And if things don't look good, you can exit with a smaller loss. And that's the main thing. You want to be able to manage the downside, whether you're trading or investing.
Yeah, I'll be very cautious up until like November 20th when the DOJ comes out with its set of remedies, the next set of remedies. I'll be very cautious trading the stock just because you never know. A divestment in business would be the worst for Google right now, Alphabet. Also, if we go back to the Webull, if you can share your screen again, Moise, go back to the Webull trading platform. I just saw news there at the bottom that says Google delivers new AI features. And this just shows, and this is from 2 hours ago, this just shows they are ramping up their AI services, their products, how they will inculcate, all those AI features across their service platform, from Maps to Music to Google Earth, the Waze app. It's just going to be an AI investment heavy couple of quarters for Google. Before we kind of end this discussion on Alphabet, I wanted to show you something on the fundamental side. Let me just share the screen here. The S&P 500, the year to date, performing at 20.79%, almost 21%. If we check Alphabet's earnings YTD, it's almost 22. It's almost mimicking the S&P 500. But what I actually wanted to kind of discuss before we end this is its revenue by segment. And if you see here, obviously the Google search and revenue from Google search is quite consistent. It's been consistent for years now. Slight uptick, but nothing to be really excited about. What I was really interested in is the Google Cloud revenue. It's just been ticking up and up. And I see this as a direct result of kind of perfect competition between Google Cloud and AWS. In a way, AWS, the features, the efficiency at which they operate, is pushing Google Cloud to do better. And they are doing it, better than previous quarters. So you see this slight uptick where it's almost at 25, if I'm not wrong, some percentage increase in revenue from from their Google Cloud business. Also, if we go to the operating income by segment, revenue by segment, sorry. You see for this quarter how the second most important revenue generator for them was the Google Cloud. It's not been the case like that for a couple of quarters. So, for example, in this quarter, there was last year, 2023, after Google search is almost other revenue. Other revenue covers all these services that they provide. So all these subscriptions that they have, that itself generated more than the Google Cloud revenue. But that's slowly starting to change. And you could see that kind of shift in their perspective where they want to be more active in the space that they want to be more active in is the Google Cloud revenue that they're kind of bringing in. So that's very interesting to see. Also on the forecast side, here we can see like how many analysts are saying they want to buy the stock, sell the stock, hold the stock. there's no red, there's no sell for the last 12 months now. And that's very rare. I mean, the next business we'll be analyzing is Apple, and you'll see a major difference here. But there's literally no one saying that you need to sell Alphabet. So I feel like on a long term perspective, um, it's going to do well. It's going to be one of the main drivers in portfolios that have Alphabet. I have Alphabet, and I'll continue to hold it and keep looking to keep adding to it as and when the time is right. I'll be cautious again, as we discussed. There are areas of concern in the short term, but as a long term investor, I feel Alphabet's the perfect play.
Do you think with the success so far with ChatGPT, that Alphabet has the opportunity to really double down on its cloud business as well? Because between Amazon Web Services and Google Cloud Partners, it's pretty encouraging to see how quickly it's starting to grow and become
Right.
a serious competitor in the business enterprise space.
Right. I mean, to be really honest, there's two main players. It's like a duopoly. There's not a third big player as such. With ChatGPT and OpenAI, they have a partnership with Microsoft. They have other investors as well, but Microsoft being one of the main investors in OpenAI, I see that as a healthy competition between Microsoft, Amazon, and Google. But clearly, there's two front runners. There's Amazon, which I will put at number one, and then there's Google Cloud. There's a lot of potential there. The main concern, again, this might not play out in future, but it's worth mentioning here because ChatGPT is in collaboration with OpenAI. Microsoft, I'm sorry, not OpenAI, Microsoft. Microsoft's enterprise business service model, like that, will for sure see an improvement. I feel that could really benefit from its collaboration with ChatGPT, OpenAI in general. But as such, I don't see them competing against an Amazon or a Alphabet for that matter. Those are the two front runners. I'll still bet my money on them. If it's just talking about the cloud business, I'll choose Amazon. But as a overall kind of a best pick out of these two, it'll be very difficult. I don't think I can pick one.
So it seems pretty clear from a fundamental standpoint and a technical standpoint that we're bullish. Bullish with some cautionary notes, of course.
I mean, for the long term, extremely bullish. Short term, up until next year, I'll be cautious just because they have a few rulings and decisions coming out soon. But yeah, I mean, their business is going nowhere in the sense that they are going to hold on to everything search related. They're going to hold on to everything that's, apart from Instagram, YouTube, and TikTok. Those are the two main players in the video industry, like video platform industry as well. We host our podcast on YouTube. We use YouTube a lot, and I just love how it works. I just love their services. The main thing now for the short run would be to see how the DOJ kind of requests or asks, instructs, directs Alphabet to kind of tackle the antitrust issues. They have had these issues in the past, and they've managed to kind of find a way to kind of maneuver around it in a way that kind of does not affect the business as such. But I've seen a trend now of regulatory compliance is being heavily enforced on these big companies. There's just this sense of, okay, the big players now cannot get away with practices that could easily be kind of overlooked a couple of years ago. That cannot happen now. The authorities are kind of starting to pick up on this. It's a bit concerning, but I believe that if your core model, if your core business model is on point, and if it can withstand 20 plus years of intense competition, left, right, and center, and still come out as the best player in the business, that's the stock to pick.
100%. We really appreciate you tuning in to another episode of Epic Markets. This is Babar Trades World.
And this is James Invest.
If you gain value from this video, make sure you subscribe.